Over the past 2 years, as China's economic landscape has deteriorated, numerous statistical datasets have been suppressed by the authorities. The Wall Street Journal highlighted this issue in a detailed report, noting that data such as land sales, foreign investment, and even cremation figures related to population mortality have disappeared in recent years. Even the official report on soy sauce production has been withheld from publication. Recently, I discovered that the central bank quietly removed another critical piece of financial data: credit card delinquency figures. The last time the central bank included nationwide credit card delinquency numbers in its payment system report was at the end of 2024. Starting this year, however, these reports no longer disclose the scale of credit card delinquencies. It is evident that the central bank intentionally omitted this data. The reason is clear: the numbers are rising too rapidly, and the bank seeks to avoid public unrest by concealing the growing debt crisis in the household sector. In this video, we will explore the severity of China's credit card delinquency problem, a situation so dire that the central bank has chosen to ignore it. Let us begin with some alarming figures. In 2021, the total amount of credit card debt overdue for more than 6 months in China stood at 86 billion yuan. In 2022, this figure remained nearly unchanged at 86 billion. However, in 2023, it surged to 98.1 billion, a 14% increase. By 2024, the balance skyrocketed to 124 billion, reflecting a staggering 26% rise in a single year. What lies behind these numbers? Let us review the context. At the end of 2021, the collapse of Evergrande marked the bursting of the real estate bubble, setting China's economy on a downward trajectory. Deflation worsened year after year. By 2023, credit card delinquencies among households began to spike, and in 2024, the situation deteriorated further. When the central bank reviewed the data this year, the figures likely appeared too troubling to release. Publishing them would have exposed the household debt crisis, so the bank opted to suppress the data entirely. To assess the gravity of the credit card delinquency issue, I examined the financial reports of 2 of China's leading banks in credit card issuance: the Industrial and Commercial Bank of China, ICBC, and China Merchants Bank, CMB. ICBC, the state-owned bank with the highest volume of credit cards issued, showed a significant increase in its non-performing loan ratio for its credit card business in 2024. According to its report, ICBC's credit card overdraft balance grew by 85.6 billion yuan in 2024, a 12.4% increase. Within this, non-performing loans surged by 10.3 billion, a remarkable 60.8% year-on-year increase, raising the credit card non-performing loan ratio from 2.45% to 3.5%. ICBC's financials reveal that in 2024, bad debts in the household sector, spanning housing loans, consumer loans, business loans, and credit card overdrafts, all increased significantly. Credit card bad debts ranked second only to housing loans, the largest loan category. If ICBC's business were not predominantly corporate-focused, its overall bad debt ratio would have been more severely impacted. This trend was not unique to ICBC. In 2023, all 6 major state-owned banks reported substantial increases in their personal loan non-performing ratios with identical patterns. In contrast, China Merchants Bank, which operates the country's most successful credit card business, presents a more favorable picture. Its financial reports show no significant surge in credit card bad debts, and its broader retail loan portfolio remains stable. It appears that the economic downturn has had a lesser impact on CMB's customer base. Given the differing customer profiles of CMB and state-owned banks, I can conclude that this wave of credit card bad debts primarily affects the middle and lower classes. CMB's branches are concentrated in major cities, unlike state-owned banks, which have nationwide coverage. Consequently, in 3rd and 4th tier cities, small counties, and rural areas, many individuals are likely facing financial ruin. Another observation concerns the central bank's data scope. It tracks only credit card delinquencies overdue for more than 6 months, whereas bank financial reports define non-performing credit card loans as those overdue for more than 90 days. ICBC's data indicates that credit card loans overdue for more than 90 days surged by 60% last year, while the central bank reported a 26% increase in loans overdue for more than 6 months. This suggests that last year's new delinquencies were primarily concentrated in the 3 to 6 month range, indicating that many individuals suddenly became unable to meet their credit card payments. Had the central bank continued to publish these figures this year, those who began defaulting last year would now appear on its list, likely prompting the decision to withhold the data due to its alarming scale. How then, can we use credit card bad debt data to evaluate the severity of the household debt crisis? First, credit card bad debts serve as an early warning signal of a broader debt crisis. The threshold for obtaining a credit card is significantly lower than for other loans. A steady job and a reasonable credit history are typically sufficient. The first is the bad debt ratio. For instance, ICBC's overall bad debt ratio remains low at approximately 1.3%, but its credit card bad debt ratio stands at 3.5%. This indicates that the household cash flow crisis has reached a critical stage. The second indicator is the growth rate of credit card bad debts. If a bank's non-performing credit card balance grows significantly faster than its overall credit card balance, it suggests that new credit card spending is not for typical purchases but likely for cash advances, which often leads to defaults. ICBC's data illustrates this. In 2024, its credit card balance grew by 12%, but its non-performing balance surged by 60%, signaling poor quality in its new iteral. The third indicator is the migration rate, how quickly credit card delinquencies transition from 90 days overdue to over 6 months. Comparing last year's central bank and ICBC data, we see that many households entered a debt crisis last year. If the economy remains weak this year, most of these individuals are likely to appear on the central bank's bad debt list, suggesting that a household bankruptcy wave may already be underway, hidden from view. The authorities have ceased updating data on delinquent debtors and foreclosed properties. This year, the central bank has withheld credit card bad debt figures. As a result, the true extent of bankruptcies in China remains a matter of speculation. This year, smaller cities have seen frequent protests. In Jiangyu, Sichuan, a bullied girl's ordeal sparked citywide outrage. In Zhengzhou, a 13-yuan bowl of noodles prompted crowds to block streets. Yet in Hangzhou, where residents faced contaminated water, no protests occurred. Why? These seemingly isolated incidents reflect the broader economic climate. When bankruptcies surge in smaller cities, social tensions become highly volatile and the smallest spark can ignite public anger. This is why I find online articles promoting relocation to small towns so misguided. A few years ago, many flocked to places like Hegang in northeast China, lured by the idea of lying flat, with homes costing just tens of thousands of yuan. Yet many who went could not last 6 months before returning to major cities. To conclude, Chinese banks have been aggressively offloading bad asset packages. In 2024, major banks transferred 280 billion yuan in non-performing personal loans, with approximately 15%, around 40 billion, stemming from credit card bad debts. Since these 40 billion have been addressed, they do not appear in bank financials or central bank reports. Thus, the credit card bad debt figures reported last year were already sanitized. This year, the scale of bad loan disposals has increased further. In the first quarter alone, banks listed 25.5 billion yuan in credit card bad debts for sale, suggesting that this year's credit card bad debt disposals will at least double last year's. Working backward, can we estimate the credit card bad debt figures the central bank is concealing this year? I believe they are at least twice last year's numbers. For those investing in bank stocks, there is little cause for concern regarding the impact of these bad debts on share prices. First, the scale of the credit card business remains relatively small, allowing banks to mask issues in their financials. Second, China's system differs from other countries. The banking system is likely the last to fail. Third, stock prices in China are often driven by policy rather than fundamentals. However, as ordinary citizens, we must not view this from the perspective of those in power. Before the banking system shows cracks, we will face shrinking assets and job losses. These financial signals, whether from bank reports or central bank policies, serve as a reminder to take proactive steps to mitigate our risks. Remember, banks can offload or conceal their bad debts, but your debts are yours to bear. Thanks for watching and joining us on this journey to unveil China's many layers. If you found this video insightful, please give it a thumbs up, share it with others, and hit that subscribe button to stay updated. See you in the next video.